welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra, and on this show, we get you an update of how the markets have been trading in the first half day of the session. Also, to help you understand which way are the markets going to go forward, and to help you understand all of the nuances of the markets and the way you should tread this kind of a scenario, is a very special guest joining in. Mr. Rajesh Agarwal from AUM Capital joins in. Mr. Agarwal, good afternoon, and thank you very much for joining in. Let me understand from you, how are you looking at the markets and the optimism that we can see today? The markets are trading almost at the high point of the day right now, up over 1%. The optimism has been there in the last 2-3 trading sessions. So what is driving the markets higher, and are we going to see this staying on for some more time?
Good afternoon, Sakshi. Thank you for calling me. If you look at the markets, from the last 3 consecutive weeks, we have seen a negative closing in the indices. Markets have been given 3 weekly negative closing, and that's the reason I think there is some kind of bottom fishing in the market first. Second, it's the result season, and the companies which are coming out with good numbers are seeing good amount of buying, as we saw yesterday in ICICI Bank, where the numbers were good, and that helped the entire BFSI sector to move up. So this is the kind of positiveness which is in the market, and not to forget the kind of vaccination drive that's going on, that's fueling the hopes that things would be under control. But on the negative side, if you see, there are daily coronavirus cases of more than 350,000. In some states have implied fresh restrictions, and these are the things which are giving a concern to the market. So I would say it's on a dicey situation. It's neither here nor there. On the downside, I would say 14,000, 14,200 would be a good level to watch out for, and on the upside, it would be 15,000, 15,200. So unless and until it comes out of this range, I think there will be selective pockets of buying. Sometimes it's one sector, sometimes it's other sector. Yesterday we saw a huge buying in financials and chemicals. Today again, chemicals are doing well. So I think there are opportunities in market apart from index.
So, sir, particularly from your perspective, where are you keeping your focus? Is it the defensives, IT, pharmas that is on your radar right now, or are you focusing on the economic recovery kind of stocks like banks and financial services, industrial, cyclicals, or maybe the metals which have been in favor for some time? Which is your focus currently, and where are you keeping your focus currently on?
See, banking and financials, no doubt, they are giving huge opportunities for a long-term player. But I would like to say that there are concerns on asset quality front going forward because of the fresh corona cases, lockdowns, and the NPAs which would occur because of non-recognition of NPA in the past. So there would be some hiccups in the short term, but yes, for long term they give very good opportunity. Some of the names I would like to mention would be Bajaj Finserv, or a Kotak Mahindra Bank, or HDFC Bank. They are doing well, and anybody having a long-term view of 6 to 9 months can definitely have a look at that. Even cyclicals are doing very well. For example, cement and steel are likely to do well going forward.
What are you buying currently? The stock recommendations that you would have for our viewers today?
See, the first stock, as we talked about banking and financials, I would like to suggest a mid-cap banking stock, that's City Union Bank. That's a South-based bank. Basically, the asset quality is very good. They are expanding their network. They have a gold loan portfolio which is very strong, and they have very low exposure to risky assets. So that is the reason we are recommending this. And the best part is the valuation is also cheap. Management is also good.
Okay.
So we would have a buy call on this with a target of 190 in the next 6 to 9 months, or maybe a year.
Sure. City Union Bank from the banking space, and the target is 190 rupees for the next 12 months. That's where investors can definitely keep their focus. So auto stocks are again back in favor, especially like, some of the companies are coming out with their results. TVS Motors, also Maruti Suzuki came out with their earnings right now. So, auto ancillary space, does that also interest you? Any stock from this space that you would like to recommend?
Yeah, there is one stock. Auto definitely is doing well. In two-wheelers, like Bajaj. But if you talk about auto ancillary, you would go with Motherson Sumi with a target of 270. If you look at the client list, they have the best of the lot with them, like Audi, Dalmia, Volkswagen, all are their clients. The third quarter numbers were very strong. Revenue was up by around 14%. The margins have improved to 10.5% in the third quarter. And the best part is the EV order book, that's electric vehicle order book, is around 21%. And the management has clearly said in past interviews that they are going to reduce debt. So that reduction is the main focus. And the sector itself is doing well. So we feel that one can have exposure into the target of 270.
Okay, Motherson Sumi, if you're looking at an auto ancillary space, this could be a pick that you could watch out for. 270 rupees is the kind of target that Mr. Agarwal is expecting over the next 1 year. So that could be one stock on your radar as well. Mr. Agarwal, what would be your last stock for today that you would like to recommend to all Money9 viewers?
See, it's again indirectly auto ancillary, I would say, because the products are supplied to tire industry. It's Philips Carbon Black. That can be bought with a target of 260 rupees. It's the largest carbon black manufacturer in India, and it has four plants with a production capacity of 5,71,000. They have recently gone for an expansion, and that's going to add to the volume growth. Even if you look up the Q4 number that has been declared 2-3 days back, PAT
Yeah.
was up by around 77%. Q4 sales was up by around 24%. And the best part is they have reduced debt from 1230 crores to 600 crores in 5 years, and they are again going to reduce debt. This is a very positive sign. And for the medium term, we have a target of 260 rupees.
Okay, sharp upside can be expected on Philips Carbon Black as well. Robust financials and results have been declared, and there's a positive sign on the debt reduction front as well. So this could be another auto ancillary company or auto-related company that you could definitely keep an eye out on. Thank you very much, Mr. Agarwal, for joining us and sharing your market outlook, sectoral views, as well as these stock recommendations with all our viewers. And hope you stay safe in these current crisis times as well. Hope to catch you again on Money9. Let's move on to see how the markets are trading at this point in time. Of course, the markets have been buoyant right from the word go as far as the benchmark indices are concerned. Both the Nifty and Sensex are trading at the high point of the day, over 1% higher now, 49,541. That's the level at which the Sensex is trading at. It's already added about 600 odd points in the first half of the session. So far, 14,816. That's the level at which the Nifty 50 is trading on at as well. You may not have seen this 14,800 kind of a level for many past few sessions. So Nifty inching up back towards the 15,000 level is definitely a positive sign that most of the analysts are looking at. Almost 163 points added for the Nifty index so far. The Nifty bank is continuously, rising higher, 1.6% gains right now, almost 530 odd points added to the index. 33,250 is the level at which it is trading at currently. When you talk about the broader market indices, they are also inching up higher, but they are slightly underperforming the benchmark indices right now. When you talk about the mid caps, they are logging in gains of almost 0.8%, while the small cap index is rising up higher with almost a percent gains at 21,712. So broad-based gain is what we can see. All the indices are participating in the kind of rally that we are seeing in the markets currently. Let's move on to see how the sectoral picture looks like at the current moment. Well, barring the metal index that has risen quite sharply in the past few sessions, there's a bit of profit booking being seen over here, but all the other sectoral indices are trading in the green, of course, led by the financials and the banking space stocks, because PSU banks are up over 2% in trade right now, almost 2% gains for financial services as well. Also, auto stocks are leading the gains at this point in time, 2.6% higher at this point in time. So that's where the flavor lies at this current moment. Flattish movement on the IT stocks. It's just trading right above that flat line. But FMCG space or the realty space, the pharma space, all are trading with some gains at this point in time as well. Moving on to the gainers and the losers pack, which are the stocks that are finding themselves in the top 5 gainer space as far as Nifty 50 is concerned. Well, you'll definitely see some of the banking finance names as well as the auto names coming into this picture. Bajaj Finance, Bajaj Finserv, the twins that have been holding their place right from the early morning trade. Bajaj Finance has risen up quite sharply. You can see a 7% hike right after the earnings. So it's over the 5,000 rupee mark again. So that's one stock that is really inching up higher. Aisha Motors up over 4.5%. Bajaj Auto also inching up higher at almost 4% gains. In Bank, this stock has been performing as and when the BFSI space runs, and you can clearly see 3% gains on this stock as well. As far as the losers are concerned, some stocks will be from the metal space for sure, which have been, dragging down the index, the metal index, right from the early trade today. JSW Steel, Tata Steel, Hindalco, all of them down 1.5% in trade. From the FMCG space, it's Britannia that's down after the earnings and seeing some kind of pressure building up there. From the insurance space, it's HDFC Life that's also down by 0.7% in trade. But overall, broad-based gains is what we can see, and we'll have to see, because this is the penultimate day, like this is the last day before we see the monthly expiry. That's tomorrow. Any kind of signs of any volatile moves towards the last hour of trade or tomorrow will definitely have to be washed out for all the traders who do intraday trading as well. And we'll keep you posted on any such moves if that happens on money9.com. So stay tuned with us.